waste more time. People who are not here, they can watch the recording afterwards. So, all right, let's dive in, guys. Hope you had a wonderful day, first of all, and thanks for being in here, committing to trading. All right, let's go. So today's class, I named it Raid Candle. It doesn't have to be a raid candle, but I don't know. I just find that name. We used to call it a raid candle. That's why I use that name. But obviously, you don't have to use that name because I'm not inventing anything or whatever. This is just for the sake of the topic. All right, raid candle blueprint class number 5. Class number 9. Welcome, guys. All right. So to be able to understand this topic, first of all, you have to know couple things before, and I'm sure most of you know these things already, and these things are liquidity, manipulation, ICT order block theory, very important. The rate candle itself is, we're basically speculating around the order block theory. Dealing ranges, you guys are already aware of these things. SMT divergence, multi-time frame analysis, very important if you want to be a day trader. It's not necessary for scalping purposes, but if you want to catch the whole move for the New York session or London session, multi-time frame analysis is a must for this topic. Time, again, this is highly important, especially if you are utilizing higher time frames. And standard deviation projections, this one is optional, but I'll show you guys at the end of this presentation how I utilize standard deviation projections with raid candles. Now let's have a quick overview about those things I just mentioned. Let's start with liquidity. As you guys know, liquidity is field of the market, right? And it is formed by swing highs, swing lows, basically a high that has a lower high and to the left and to lower high to the right, forms a swing high, which is buy side liquidity. I'm trying to make these parts as quick as possible because you guys already know this. And sell side liquidity is a swing low formation, which means the candle in the middle has a higher high to the left and to the right. So this becomes the sell side liquidity and swing low. All right. And the ICT order block theory. Again, I'm gonna just quickly read through these things and move into the good stuff. So the ICT order block, to be able to understand the order block, you need to be aware of a couple things. First, the open price of the OB, which is the order block itself, then mean threshold, which means the 50% of the order block, and order blocks all obviously becomes validated once the following candle moves away from it. For example, here you have 2 down close candles and the third candle moves away from it, and once it closes you have order block confirmation. Once the market decides to pull back into the OB, you can utilize that, and the low of the OB in this case, because it's a bullish order block, should be safe low. Oh, hold on, I forgot to mention something very important here. So if you're observing a consolidation or a pullback in a certain time frame, that usually indicates market is forming an order block on a relatively higher time frame. For example, if market is consolidating on 5-minute chart or a 15-minute chart, what that means is, in reality, on a relatively higher time frame. So what is relatively higher time frame of 5-minute? It is 15-minute, right? So that means 15-minute time frame is probably forming an order block. Okay, or if you are watching an hourly, for example, an hourly consolidation, that means on a relatively higher time frame, what is relatively higher time frame is 4-hourly, right? The 4-hourly chart is probably forming an order block. Okay, I think this is very important, and I'm not sure if I think it's overlooked. It's very overlooked. I mentioned this before in market maker model classes, and I believe it's very overlooked, but I'll show you what I mean by that in a second on the charts as well. The other thing, dealing ranges, you guys already know this as well, and using this properly. And dealing range is a tool, as you guys know, that helps us determine the market is whether it's in premium or in discount relative to its narrative, right? And we establish the dealing range from the liquidity whether that's buy side or sell side with that range. Within that range, then we expect to pull back into premium if we have a short bias, or we expect to pull back into discount if we have a bullish bias. So it helps us basically to form or build a framework to trade within, and it allows us to basically like not go in the market in discount when we are short, or vice versa, go long in premium when we are long, right? This is a very, very important tool, and we're going to be using this along with RCT order block a lot in today's class. So SMT divergence, this is going to be optional for this topic, but let me just quickly read through this, because there are a couple of people still struggling with SMT divergence. That's why I put these things here. So SMT divergence is basically an irregularity in intermarket behavior, irregular intermarket behavior. For example, we have NASDAQ, then we have ES, right? When you observe NASDAQ, let's say, forming a higher low, and on the other hand, ES is forming a lower low, that forms a bullish SMT divergence at the lows. And on the flip side, if you are watching a bearish SMT divergence, that means you're watching the highs, which means NASDAQ, for example, is making a higher high, whereas ES is making a lower high at the same time, which means the assets intermarket is diverging. It indicates a bearishness in the marketplace, right? And also this divergence, SMT divergence, applies to all markets, forex, cryptocurrencies, commodities, and indices. All right, let's dive in. This is the good stuff. Rate candles. Again, I'm going to say it one more time. I named this rate candles because we used to call this rate candles. You don't have to use this name whatsoever. Again, I'm not trying to invent shit. So, all right. So, again, I was covering order blocks a lot. So let's take a minute and try to understand the order blocks a bit deeper, because we're going to be using order blocks a lot for this topic. Okay, the order block formation is essentially a relatively lower time frame pullback and consolidation, just like I mentioned. And for example, when price consolidates or pulls back on, say, 15-minute time frame, the price move is solely to form an order block on a relatively higher time frame. So to simply put this down, I can say, for example, if you're watching this on the weekly time frame, if the market is not making a high or a low, basically it's just chopping around, that means market is actually trying to form an order block on the monthly time frame. Okay, you got to go up one time frame relatively. All right, so if it's 15-minute, you got to go up one time frame, which means you're expecting an OB on the hourly time frame, and until it forms, you don't do anything. All right, so the best way to understand the pullback is utilizing dealing ranges. You guys already know this, so let's take a look at a couple examples here. All right, so on the left hand side, left upper corner, there is NASDAQ chart on the 15-minute time frame. Okay, we have a buy side, we have a sell side, and we have the dealing range from buy side to sell side, and we are observing a pullback. So 1, 2, 3, 4 up close candles here into where it goes into premium or dealing range EQ, right? And it forms an order block essentially. This is the pullback on the 15 time frame. Now let's take a look at the same price action on the 5-minute time frame this time, which is on the right hand side. As you guys can see, so the areas I circled, this one and this one, it is basically chopping around. It's consolidating. It's not making, any high, any low. It's basically like 1, 2, 3, 4 candles, which means 20-minute consolidation. Here, 1, 2, 3, 4, 5 or 6, like almost 25, 30-minute consolidation here. But on the relatively higher time frame, it's going to be forming an order block. Okay, this is basically what I mean by that. And the OB will always be into range EQ or premium. So another example, more hard time frame, monthly time frame on the left hand side, the up close candle, we have the bearish order block, right? Just one candle, and this one candle on the weekly time frame will look like this, which means it is consolidating. So it formed a low, it formed a high, and then it's going back and forth too much. It's basically kind of like range bound, So when you observe a range bound market, just go one time frame higher. All right, that's basically what I'm saying. Just go one time frame higher and wait for that order block formation. So what you need to wait for is that time frame closing candles and forming an OB basically. All right, and until then, don't touch the market. So introduction to the rate candle. What is the rate candle? So the rate candle is what I refer to as the manipulation above a potential order block, okay? And I'll show you on charts. Obviously now you might be confused about this, but you'll understand it better in a minute when I show it on the charts. All right, so simply when market is forming an order block, at some point in time, we observe the manipulation above an order block, okay? This is very important. This is the bearish scenario. And in the bullish case, you're going to observe a manipulation below an order block in the bullish case, okay? And I'm going to show you what I mean by this in a second. So this manipulation usually forms a V-shaped rejection or a smart money reversal. This is, you can refer back to the market maker model classes for this, but you guys already know what V-shaped rejection or smart money reversal is already. And the most important aspect of rate candles is that the individual candle that manipulates above or below an order block should close weak in bearish cases and it should close strong in bullish cases. This is very important because this is the confirmation, okay? This rate candle forms a market manipulation, and now the expectancy rate of an expansion on the following candles increases, and this gives us the bias, all right, or intraday narrative, and that's where we find trades. We either swing trades or narrative or like New York session trades or whatever the case is. It doesn't matter that much. It depends on the time frame you're looking at. So rate candles also confirms the order block formation. The dealing range provides a framework for the trader, and the dealing range becomes the order block itself. Very, very important, okay? You're not going to take the dealing range all the way from the manipulation down to the OB or vice versa, okay? It's going to be the order block itself. And don't worry, I'll show what I mean by all these things in a second. Now, the confirmation, again, you must wait for the closure of the rate candle for better trading results, okay? This is time. You have to wait for time, all right? You got to always be looking at the right hand side, right corner of your screen for time, and you have to wait for the candle closure before pulling the trigger, all right? Remember, the candle bodies will tell you the story, so you will not miss anything. Don't worry about it. All right, examples. Let's take a look at it. All right, so here we have an order block formation, right? Market is pulling back. One candle, one up close candle, second up close candle, third up close candle, and then distributes lower, right? And this formation is what we call an ICT order block, correct? So here I'm gonna move one more, same chart. A one up close candle, second up close, so 3 consecutive up close candles, and the following candle, this is the rate candle, okay? Why? Because you have the OB high, okay? It sweeps above, so it initially trades above that OB, all right? But look how it closed. It closes weak, and the body is staying below the OB high. Now, basically what it does up here is it is manipulating, all right? It is manipulating. Once this kind of closes weak like this, and the body is respecting the OB high, now you have the rate candle confirmation, which means we can now find setups, and I'll show you how you can find setups. This is the rate candle itself, all right? And anything above the OB high, now initially you don't know whether this is going to fail or not. That's why you have to wait for the closure of this candle, all right? This could be another expansion, or this could be the 4th consecutive candles. You don't know that. But if you utilize multi-time frame, you'll understand whether this is going to end up being a rate candle or not. And that's the beautiful thing about analyzing the market on a couple different time frames. All right, so let's go one more step. Here we have the rate candle high now. Shouldn't get it violated. Why doesn't it why does it? I mean, the reason it shouldn't get violated anymore is because market already manipulated up here. All right, you will never see a manipulation getting manipulated one more time, which means the high is safe high. All right, like that's the simplest way I can put this down. Now here, another example. This one's a bullish example. Market is distributing lower and lower. This is the down close candle, and the following candle, the up close candle here. It sweeps its low, right? You have the OB low, and look how body is closed, right? So first of all, it closes as a green candle, bullish candle, right? and it closes above the OB low, which means it is confirming the OB and it manipulated below it. So the manipulation is completed. Now this low, excuse me guys, now this low shouldn't get violated. All right, and the up close candle here is the rate candle itself. Now you can look for long entries. This is the market maker's buy model, basically original consolidation. Now you can target that original consolidation high without getting manipulated. All right, this is the sweep. Candle closed above the low, and as a green turns out a green candle, you have to wait for disclosure. Then you seek for entries, and I'll show you how to find entries as well. So don't be concerned or anything. All right. This is basically, I'm just explaining the rate candle itself. So this up close candle becomes the rate candle. All right. So why do we wait for or look for time and the time frame? Why is it important? So basically, the reason why time frame is important. It's important because when it comes rate candles, what kind of English is that? When you observe the manipulation and the OB formation on, say, the hourly time frame, right? You're going to be expecting an expansion on that specific time frame. All right. So for example, let's go back here. If this is an hourly candle, and if you see the rate candle forming on the hourly, you are going to expect the following hourly candles distributing or expanding on the hourly time frame. Okay, now your concern becomes that time frame, not the lower time frame. All right, that's basically what I mean. That's why the time frame is very important. If you're observing it on the 5 minute, then you expect 5 minute distribution or 5 minute expansion. All right, so that being said, the rate candle occurs on any given time frame, causes expansion on that relative time frame. This could be also 1 minute, 30 second, any time frame is fine. All right, whichever time frame you see it on, expect an expansion on that time frame. All right, so the importance of time this time is because we are speculating around OBs and rates, so you need confirmations, right? Because you don't know whether that's going to be the high for the rate candle or not until it closes. Thus, you have to wait for the rate candle to close. For example, if you spot a potential rate candle at 10 a.m., all right, on the hourly time frame, you have to wait until 11 a.m. so the hourly candle closes before you execute anything. All right. Now you expect expansion after 11 a.m. All right. That's basically why the time is important. All right. So the time and the time frame comes all together basically. All right. So if rate candle is on the higher time frame, 15 minute and up, you must analyze multi-time frame, because you have to break it down to either 5 minute or 1 minute or less. If you like to use second time frames, microsecond time frames, that is also fine. This is for entries, all right? And I'll show you exactly how to do it. For the lower time frame analysis, utilize what you've already learned from market maker model, dealing ranges, and SMT. But SMT is optional. And again, no shorts and discount, no longs and premium. You guys already know this part. And you don't have to be cautious about displacement, as rate candles usually closes with a displacement and or a form of a V-shaped rejection anyways. Okay. Now, let's take a look at some real-time examples, the real-life examples together. And what did I say here? Rate cannot occur on any time frame. And if you wish to be a scalper, it applies as much to 1 minute time frame. So you can, if you watch 1 minute, and if you want to be a scalper, you can do the same thing on 1 minute and just target 1 minute lows or highs after rate candle forms on the 1 minute. Okay, that's also fine. All right, now I gotta pull up the charts. Give me a second, guys. So I'm gonna go through the chart on the charts myself. Where's trading view? Okay, cool. So here's the trading view, right? I can show an example from today as well, but first I'm gonna talk about one thing that I have noticed from last week, which was clean. So here, where is that? I'm on the 15. Okay, here I'm on the 15-minute time frame right now. Okay, this is NASDAQ chart. Now, here we had a sell-off pretty much the whole overnight session, all right? And here, this is 9:30 candle, New York opened. It's sold off more. Here, the first pullback. All right, I'm gonna zoom in a little bit. It pulls back for the first time during the New York session. Okay, I don't care about the previous overtime price action. During the New York session, it's pulling back into fair value gap and potentially forming an OB, right? But at the time, while we are watching live, obviously we don't know that. All right, we don't know whether this is going to be 2 consecutive candles or 3 or 4 consecutive OBs. You don't know that. All right, so what you do is you look at the highs. All right, this is the OB high. You annotate all the highs, so as it moves higher. So the first one, first of all, the first high, then it closed above, no weakness. Then the second high, and here at 10:45, it goes for the high, and look at the closure of that candle, 10:45. It closes weak, right? And the bodies are also staying below the OB high. So I'm going to annotate this, okay, as basically OB high slash let's call it manipulation, right? And 10:45 candle closes below. So that means now we have a rate candle, and it's confirmed because the candle closed with below the OB high. This becomes the rate candle itself, and then we have the OB, the 2 up close candles, the consecutive candles. This is the order block. All right. So what I'm gonna do, I'm gonna delete the rectangle for a second to keep this better. So this is the OB high. Now we have the OB low, right? I'm gonna annotate the OB low, and then I'm gonna show you guys the most beautiful thing you can ever see. Now, once the rate candle is closed, what you need to do is you have to observe, you have to find your framework. What is the framework? The framework will be the order block itself, right? From OB high to the OB low, you have the range EQ. Now you expect price coming back in the range EQ, which is basically the mean threshold of the OB. All right, it comes back into range EQ and does what? Sells off. It goes for whatever target is here. All right, now let's take it a bit deeper. I'm gonna annotate. Hold on. This is the 4 o'clock. This is the New York session entirely. All right. Now, what I'm gonna do is I'm going to analyze this specific thing on lower time frame. All right. So I'm going down to 1 minute, and I'll show you how it looks like on the lower time frame. Okay. So this is the OB high. Okay. And manipulation. So anytime, the moment it goes high above it, and then this place is lower, this becomes the manipulation, okay? Because it displaced below or displaced within into the range. Where's okay here? All right. Then we have the OB low right here, which means now we have the dealing range, and the dealing range is going to be from OB high to the OB low, and 10:45 the rate is confirmed. So here. 10:45, where is it? Oh, 10:45 is the open, so it confirms it at 11 o'clock, right? Because it's the 50-minute time frame. This is the whole 50-minute candle. It closed here. All right, now you have the confirmation. Now what you do is, it's pretty much the same thing. It's basically what we've been doing. You expect market to pull back into the range EQ or premium, right? And here you have the premium fair value gap, and then you sell that. All right. Because the manipulation up here already took in place, which means, again, the market will never manipulate a manipulation, if that makes sense, right? You'll never see that. So it comes to the premium fair value gap, in this case, sells off and goes for the whatever the lows is, all right? So the whole OB, mean threshold, acts like what? It acts like basically a resistance, so to speak. I don't like to use that word, but it's what it is. And it goes for the sell side. Here, if you wish to have more confirmation at the premium fair value gap, look what happened there. It's the same deal on the 1 minute time frame this time. Up close candle, two consecutive up close candles, right above, body closed below the high, the OB high, and it closed weak. You can basically turtle soup that, all right, if you wish. So this could be your entry. This is the manipulation high. You target whatever target you have, all right? But if you don't want to do that, this is the same deal on the 1 minute, the OB, confirmed. The OB is the range EQ comes up there and sells off. I think this was an SMT divergence also, but it doesn't have to be. All right. So this is how it looks like on the lower time frame. Now I'm gonna pull up another example. This one was on the hourly time frame from, I think, I'm not sure where was it, from last week, I think. Oh, right here. Okay, so here, this is basically the New York Open 9 o'clock candle. What it does is you have 1, 2, 3 consecutive up close candles, right? This is the pullback, and at 9 or 9:30, I'm not sure which one was the case in this case, but it trades above that OB high, right? And look how it closed. It closed weak, and the body is staying below that OB high. Now in this case, we have the sweep, or let me put it this way, the OB high. All right, OB high / manipulation, because I'm gonna go down to 1 minute as well here, just to showcase it's the same thing. Now the only thing I need to mention here is because this is forming in this case on the hourly chart. So what you expect or anticipate is the following hourly candles expanding. All right, expansion. And in the previous example, because it was on the 15-minute time frame, now you're expecting the following 15-minute candles expanding in the direction of the OB. Now, because it's forming a bearish OB, obviously the expansion directionally will be sell side. Now here's the OB high, here's the OB low, right? The OB itself, once this candle closes, the red candle closes, the OB itself becomes the range. All right, you don't have to take it from the manipulation. Now you have the OB, you have the range EQ, basically the mean threshold of the order block. Now once you have the framework down, go down to the 1 minute. All right, where is it? All right, here. Go down to the 1 minute. The reason I go to the 1 minute is basically because of the stop loss purposes. You don't have to do that, obviously, but here's the manipulation. All right, and as you can see, it's the same deal. Look how it rejected there. All right, that's very important. It basically like kind of chopped a bit, but then it displaced below the OB high, and that displacement, you can also take that as well if you wish. Personally, I like to wait for the confirmation of the rate candle though. But it's basically ICT 2222 model with a slightly different perspective, because I'm looking for something specific, which is the rate candle. Manipulation. Now the high here, it's not going to get manipulated one more time. Why? Because it's already manipulated. So this is New York Open, basically goes for the fair value gap and sells off. Once that candle confirms on the hourly, so at 10 o'clock here is the 10 o'clock open. Okay, I'm gonna annotate that because this is the setup on the hourly chart, right? So I'm waiting for 10 o'clock open for confirmation. This is 10 a.m. Basically silver bullet also. What does it do here? So it basically comes down first and then goes for the premium, right? Premium, and sells off, targets the OB low, and keeps going for the furthermore. And I'll show you why it goes here as well in a bit, but that's not my concern at the very moment. And in premium, what it does is it's also forming more OBs or rate candles here. As you can see, this is your confirmation to go short in the premium. Or if you want to keep things traditional, you can also wait for an SMT divergence. All right, but if you don't, if you want to turtle soup these things, rate above, body close below the following candle or the other one, you can short that. All right, hope it makes sense. So here, this portion becomes what? It becomes the premium. So the market is in premium here. It's not the fair value gap, but so the market is premium. Now you're expecting the following hourly candle. So you have 10 o'clock, right? Then you have 11 o'clock, and then you have 12 o'clock. So look when it look when price stopped. Oops, I didn't mean to do that. Look when price starts stalling. The first hourly candle, this expand. The second hourly candle expanded, and the third one, price starts stalling. it's probably pulling back or whatever, but that's not our concern. Our concern is the first 2 or 3 candles on the rate candle time frame. All right, that's what you're anticipating. You're anticipating if it's on the hourly, the following hourly candles should expand, or if it's on the 15, the following 15-minute candles should expand. All right. Okay. Hope it's clear. Let's get back to the presentation real quick. And don't worry, guys, if you have questions, take a note. I'm gonna turn on the chat when I'm done with the presentation. All right. Okay. Give me a second. I'm trying to. All right. Cool. All right. This is the fun stuff. I'm not a. You guys know this. I'm not a huge fan of standard deviation projections, but with order blocks and breaker blocks, technically, it goes very handy because this is the fun stuff, guys. You know what? I've written down anyways. So. The reason I like to use standard deviations with the rate candle and the order block itself is because I like to day trade, which means I like to catch the whole move for New York session, right? And usually, hold on 1 second. All right. So usually, give me 1 second, guys. I think I should have one more slide here. Give me 1 second, sorry. All right, never mind. I don't have it. Why? Where did it go? Did I delete it accidentally? And anyways, so here, the reason I like to utilize the standard deviation projections for the OBs after the raid or manipulation is because it gives the whole New York session expansion. So sometimes we have this question like, how far can it go for the duration of the whole session, or how much can it go? The sell side is taken. Like, when can it reverse or whatever? Now that comes in very handy if you use standard deviation projections of the order block. Now, as a general rule of thumb, I should have a slide here. Anyways, as a general rule of thumb, okay, the 15-minute and the hourly order blocks after the manipulation, though, so you have to have the rate candle. This candle, for example, here, there's no rate above it, so I don't care about that candle, okay? I care about the candles where it manipulated. So once the manipulation is completed, now I have the order block. Now I can utilize something. And if the order block is on the 15-minute or the hourly, this is a general rule of thumb though, the standard deviation projections of that 15-minute or the hourly candle order block will give the whole New York session expansion leg. So you look at the -1. Usually the order block projections really loves -1.5 standard deviations, but it could also go as much as -2. But as a general rule of thumb, again, the OB projections really likes -1.5 standard deviation projections. Whether that be the weekly OB, the daily OB, doesn't really matter. But here's the beautiful part. If this formation happens on the 4-hourly, and if you project it, that is most likely going to give you the whole weekly range, okay? Until obviously the market sentiment changes or something happens, maybe like CPI flips the coin and market goes in the other direction. That's another case. I'm not talking about like those news related events. But on the 15-minute and on the hourly, it gives the whole New York session. This is New York close, okay? I annotated it for you. This is 10 o'clock. This is the same example I just showed you. New York close, 4:15 p.m. The OB projection, -1.5 projection, basically the lunch low, and it expanded as much as -2 and reversed here. Okay, so what we do here with the projections is basically we have a pullback, market forming the OB, right? Wait for the manipulation above the OB. Once rate candle is confirmed, establish the DR, and basically short into premium. So this wick is your short entry, and then you can do a couple things. Okay, first you can target the OB low, or you have sell side here, you can target that, take partial. Okay, but if you want to hold the full position all the way to the New York close, that's how you do it. You look at the projection. Okay, so here in this case, 2 consecutive up close candles, the OB, and the following candle is the rate candle, basically. All right, there's another example on the hourly time frame. It's the same example I just showed you also. the standard deviation projection of the OB after the rate candle confirmed, retracement into the mean threshold of the OB or the range EQ basically, and then expand it all the way down to the -2 standard deviation, and New York closed. All right, this is the whole New York session. This is the open, this is the close. Whole New York session. All right, don't take my words. All right, don't be lazy. Just put in the work, do your own due diligence about this, because like I said, I'm not a huge fan of standard deviation projections, but with order blocks and with New York session, it is kind of useful. Another example, this one's on the 1 minute time frame. Obviously, the 1 minute time frame standard deviation projection will not give you the whole New York session range, but it's going to give you how much could the first leg basically expand. Here, as you can see, at -2 standard deviation, it kind of rejected and started stalling here. And this could have happened at -1.5 as well. So I don't have a specific rule for like -2 or -1.5 or whatever. But again, the order block projections loves -1.5 and -2. Whichever rejects, you collapse your trade. And this is the settings for the projections. If you don't know how to use it, you can DM me and I'll help you out. So I basically turned on -0.5, which is basically the mean threshold of the OB or the range equilibrium. Then we have -1 standard deviation projection, -1.5 and -2. Now, how do we execute that? What do we do? So first, I'm going to show you a live example about this, but first, spot the rate candle or anticipate it, okay? Before it closes, you can only anticipate, but after it closes, now you have something, all right? So wait for the closure of that candle, and remember, it has to close weak in bearish cases and strong in bullish cases after rating above or below the OB, and the candle, the body of the candle should close below the OB high or OB low, okay? So establish the dealing range. The easiest way to get the dealing range is to take the range from the OB high to OB low. And if the rate candle is not on the lower time frame, switch the lower time frame once the rate candle is confirmed and establish the dealing range. Once the following candle opens, seek short entries above its open price / premium, and seek long entries below its open price / discount. You can also utilize the order block and its mean threshold, and mean threshold must not fail. Okay, that's the last resort. That's how much it should retrace. That's the furthest it could go. Sometimes you have a rejection block and it could go as much as the rejection block, but generally the mean threshold is the last resort. So if rate occurrence was a V-shaped rejection or a sharp return, wait for SMT divergence. This is optional, you don't have to, because the manipulation has already taken place, so you don't have to wait for another manipulation. But if you want to save furthermore, you can do that. So in this setup, the highest probability target will be the order block low in a bearish case, or the order block high in a bullish case. That is a great target for the first partials, and the rest could be basically runners or your break even. Okay, so for example, so let me just show you an example for a setup, for an execution. Okay, hold on. Cool. So for example, today I think we had something today. I didn't watch today's price action that much, but all right. Let me just scan it real quick. I think it was the 5 minute, probably 5 minute. Okay. So here, 9:45. Okay, 9:45. Like through the 9:30 to 9:45, 9:50. Prices in pullback, right, or expansion, whatever you call it. So it's expanding basically. At the time of these candles are printing, you're thinking like, okay, this is expansion. Today is going to be a long day. I need to look for bullish setups, etc. But all of a sudden, okay, at 9:50, price goes above the previous high, essentially, and fails. Now the body closed below the high, right, which indicates strength. So now you can potentially have a bearish order block here. So you can annotate the dealing range. You have the dealing range here. This is the OB low. This is the sell sign. Okay, OB low. So I'm gonna go down to 1 minute in a second. Sell side, and you have OB high / manipulation. So the down close candle, which rates the OB high and forms the OB, is the rate candle. Okay, this candle right here. So now let's take a look at the 1 minute. The same thing on the 1 minute. So here's the manipulation. It just wicked. Even on the 1 minute, you can see it, the bodies were respecting, and then displaces lower. That displacement, you can take that if you wish. There's nothing wrong with that. This is basically ICT 2022 model with the rate candle idea. You have the OB right there. Displaced one more time. Came down to the range EQ. The range EQ initially gave a bias. Market IFED'd above an up close candle, which is basically becomes the rate candle. Now you can go short above the rate candle here. Shouldn't get violated because that's the manipulation. And then it distributed all the way down to the OB low and reversed from here. Which is basically why I'm saying like the high probability target in this case, or in the context of rate candles, it's always the OB low. Take a partial here, put your stop at break even. You don't have to be concerned about the rest. Okay, this is not always the case though. It doesn't have to like reject at the OB low. It's just like today was pretty whatever. I don't know why it turned from here, but it's what it is, you know. But that's basically how you execute and using multi-time frame. Now you can do the same thing on the 1 minute as well. For example, let's clean the chart. Let's say you just want to scalp the market. You don't want to be concerned about different time frames. You don't want to be doing multi-time frame analysis, whatever, right? You watch the market, let's say on the 1 minute. Here, market basically pulls back, right? And this goes into premium also. Like if you look at the dealing range, it's in premium. So if one up close candle, second up close candle, and the third one tries to break out, basically goes above the OB or the previous high and fails. The body also closed below the high and distributed lower, right? And it had a weak close. Now you have the OB, which is both candles. Here you have the OB and the dealing range. Once it trades into the range EQ or premium, that's your short. And as a scalper, you're targeting obviously the most recent low, right? So if you have questions about like which time frame I need to use, it doesn't matter, guys. It really does not matter. Okay. If you want to be, it really depends on your own character and own personality and own will. If you want to be a scalper, this is how you do it. If you want to be a day trader and try to hold the whole session, just look at the 15-minute or the hourly. All right. So it's the same thing. OB rate candle traded into the mean threshold of the OB. You short that, target the style side. Boom, scalp, done. You know, one and done. And it offered 15 points. I think that's a pretty decent, generous offer for a scalper. All right. Now, should I show another example or no? I don't know. I'm not sure. I mean, I can show another example. Oh, another thing also. Sometimes you're gonna see something like this, for example. It doesn't go above the OB or be high, and it fails. And the reason for this is because now I'm gonna pull up a yes in a second, but it's because the other asset is probably rating the high and closing weak here. That's why. So basically, you have an SMT divergence there. So let me take a look. I don't want to bullshit, but that's usually the case. I'm not sure if that was the case in this case, but we'll see. Where is it? Thursday. Why am I on Thursday? Not here. This is the high. So in this case, it was not the case. But hold on. Since I mentioned it, I'm going to show you one example for that. Let me see. Let me check. Oh, here. We have it here. So yeah, Nasdaq was rating, so it's forming a rate candle. ES is not doing that. Okay, this could be vice versa as well. Sometimes like ES does that, forms the rate candle, and Nasdaq doesn't. So you have to be watching market simultaneously. Like here, for example, we have one more, if you will. It forms the rate candle, right? Sweeps basically above the OB, and Nasdaq does not do it. You see this could have been the OB, but it doesn't sweep the high and doesn't form the rate candle itself. All right. So here at the lows, for example, if I look at here, this is the same deal on the 1 minute point of view. Down close candles here, it sweeps, the body closes above. Nasdaq doesn't sweep, and it rallies. All right. And the candles, the down close candles, basically used as an order block. And if you can take a look at the dealing range, the range EQ, and you trade that. All right, this is the 1 minute though. Okay, cool. Let me finish the presentation now. I'm going to turn on the chat. So key takeaways. All right, I can show more examples if you guys ask me to do it, but for now, I think that's enough. Cool. 1 second. So key takeaways. What are the key takeaways? All right. The rate candle occurs on any time frame. Okay, it doesn't matter which time frame it is. It just means that if it occurs on, let's say, X time frame, expect an expansion on that time frame. Thus, you should also manage your stop loss accordingly. So if it's on the hourly, you should expect large swings on the 1 minute perspective regarding the hourly time frame. So you cannot use 1 minute PD arrays for your stop loss management. Okay, you need to use the hourly, or you need to wait for the hourly candle open and closes on all that. Because if you use the 1 minute using the hourly OB or the hourly rate candle, then most likely you're going to get stopped out in profit. Okay, so second thing, you must wait for the rate candle closure, because as it moves above the OB high or below the OB low, while watching the live market, you don't know whether that's going to end up being a rate candle or not. So you have to wait for it. Okay, I cannot stress this enough. Obviously, it looks easy in the hindsight, but again, you don't know it when you're watching live. So wait for it, and trust me, if you wait for it, you're not going to miss the move. Trust me on that. I backtested this for a long time. As always, you must utilize everything we've learned so far. So you have to use dealing ranges, and if you have a problem with any of these, just hit me, text me, send me a message. Let's go over it together. S&T divergence, market maker sell model, buy model, time and price. I think time is very important. Like hourly OB will be confirmed with the hourly closure, so you have to wait 1 hour before pulling the trigger. Okay. Now, you must thoroughly analyze multi-time frame unless rate candle occurs in lower time frame, such as 1 minute time frame. But as mentioned before, if you're observing a rate candle on the 1 minute time frame, your expectations should be limited to 1 minute time frame, which means scalping. So in this case, you should not be expecting any higher time frame expansion. So if you're seeing rate candle and like retest of the OB mean threshold on the 1 minute, you shouldn't be targeting hourly lows or whatever, if that makes sense. Okay. The dealing range is provided by the order block itself. You do not have to take it from the manipulation. If you do take it from the manipulation, that's also not wrong, but just to keep things easier, you can just look at the order block itself. You can use standard deviation projections of the order block to get a better understanding of how further the current session can expand. So as a general rule of thumb, like I said, projections of the 50-minute and the hourly order blocks after rate candle forms gives the whole session low. Okay, this is optional, but in my opinion, very important. Because who doesn't want to catch the whole New York session anyways, right? Like everyone wants to do that. Like, you want to enter at 9:30 and close your position for like 400 points at 4 o'clock. Like everyone wants that, right? So body of the rate candle tells the story, and it can be used as a confirmation on lower time frame as well, which means, so for example, if you're watching 1 minute dealing range, and if it pulls back into the range EQ, basically one set off for life, right? You don't have to wait for an S&T divergence. If rate candle is forming, you can use that as your confirmation as well. Okay, so you can use traditional market maker model with a confirmation of this topic. All right, questions. I'm gonna turn on the chat. If you guys have questions, ask it away. If not, I'll be wrapping this up here. How do I turn it on? Give me 1 second, guys. I'm really bad with Discord. Okay, I found it. All right, now you guys should be able to ask questions. Again, guys, don't roast me for naming this rate candle. I'm not inventing anything. You can name it whatever hell you want, okay? This is just for the sake of this presentation. I said rate candle, so it's what it is, you know. Thank you, Tony. So last week, for example, on Friday, Tasita, I think you're here, right? So this is what I saw when I was in the meeting last week when you got that short. I'll show you. This was Friday. So this is what I saw. I saw this pullback forming an OB here, right? And then it rejected here. Okay, this is the hourly time frame. It rejected, formed the rate candle. Now you have the OB, and look where it retraced. It retraced all the way up to the range EQ, sold off, or the OB mean threshold, and sold off. That's what I saw, which is why I said it should be short that day. So here on the 15-minute, on the leg down, it did the same thing. Raid candle confirmed. Now you have the OB here, and it sold off there. I'm not sure if this was this. I think, yeah, it was this setup, I think. Now, this is the thing I was mentioning, by the way. Okay, it's a good example. I'm going to talk about this for very briefly. So this is a sweep and manipulation. Close week. Now you have the OB, right? You have the dealing range. Initially, it comes up there and sells off, right? But after that, it pulls back deeper. And where does it go? This is the thing I was talking about. So the mean threshold failed, but market go all the way to the rejection block. Now this could happen, okay? This could happen, especially because we are having a very, very volatile market, okay? So sometimes, yes, the mean threshold will fail, but that does not mean the setup is wrong. The setup is invalid. The setup will be invalid if it goes for the manipulation high, okay? Until it does that, it's not invalid. It's still valid. All right. No mention of news. What do you mean? Oh, not on the screen. Oh my god, my bad, guys. Hold on. All right, it should be on the screen right now. So this is what I was talking about earlier. Here on the 15-minute, it formed an OB or an up close candle initially, but the following candle rated above the OB, okay, and it failed. The candle closed weak. Then it retraced into range EQ and premium and sold off initially. And then at 11:45, we have a very big candle of like 100 points. It violated the mean threshold or the what do you call it, like the range EQ. But then immediately after, it sold off. Now this happens. This could happen. Okay, but this does not mean the setup is invalid or whatever. The setup invalidation will be the setup invalidation will be if price goes for the rate candle high. All right. As long as it doesn't do so, the setup is still valid. So here in this case, it retraced deeper into the rejection block here. Now that's what I was saying. Like sometimes mean thresholds will fail. But in those cases, it's usually the market usually have a rejection block, just like this example. Okay, but more often than not, this is a rare occurrence, though. Just so you guys know, it's not like it doesn't happen all the time. And here, like if I look at the standard deviation projections of this, OB. It's probably gonna give this low as well. Let's see. Let's extend the right lines. Yep, minus 1.5, and it reverses there. And that's basically where it closed the New York session, minus 1.5. All right, questions. I'm looking at the chat. Not on the screen. Does the order block has to have minimum of 2 consecutive candles in order to No, it could be one. Just like this example, it could be one. But that's a good question though, because I'm sure you guys will ask this question later on. So sometimes what you're gonna see is, for example, let me find an example. No, not that example. Here. Is that a good example? I mean, my point is sometimes you're gonna have like 5 up close candles like this, then raid, it goes for the low, right? When you have 5 candles like this or 6 candles like whatever, a lot of multiple candles like this, as a general rule of thumb, use 3 of them, okay? Not all 5, just 3 of them for dealing range and all that stuff. So the first candle, the second candle, and the third candle, rejection, this is the range EQ, goes for the premium and goes for the sell side. Okay, if you use the whole thing, sometimes you're going to be offsided. Okay, so for a good example, I need to find it. Oh, here. So here, 1, 2, 3, 4, 5, 6 up close candles before the ray candle forms, right? So in this case, use the first 3 candles, all right, as your projections, your dealing range, and all that. Not the whole 6. This is, I think you're gonna understand this better if you back test a lot, because I mean, what happens is, especially if it's on the higher time frame, on higher time frames the market will use the first 3, but if it's on the lower time frames, sometimes it uses all. Like in this case, it used it all. As you can see, broke the range, then came back to the range EQ and goes for the sell side. But in most cases, the first 3 candle is the candles that you should be concerned about. There are different kinds of entries also. Like you can use the OB, or you can use, like, there are different kinds. Like for example, you can use the first candle and its mean threshold or its quadrants as well. I mean, this solely depends on how you like to execute personally. So I hope that answers your question, Sir Nasdaq. Okay, we have the same thing here. Look, right there. Boom. It basically turtle soup sweeps, manipulates, and then goes for the OB low. First things first, the OB low, and the second thing, the sell side. Now here, after that, look what happens though. This candle, now that's swept. Now you have another manipulation. Now this becomes an order block. If that makes sense. And market uses its range EQ or mean threshold right there to go for the buy side. Now this is overnight price action though, so it failed, but just trying to showcase why it reversed here, for example. And you're welcome, bro. Imagine also if there is a multitude of the candles, we can go to a lower time frame to look for an. You can do that, yeah. I mean, you can strictly use this thing, the same thing, on 1 minute only if you want to, as a scalp. Like for example, let me go to the today's session because I did not watch it. Let me just find something on the 1 minute. So here, you see that? So we have 1, 2, 3 down close candles, right? Basically comes for the low rally. So now you have the OB and the dealing range. Now you can use that dealing range to buy buy the assets and target whatever you're targeting. You know, the smart thing to do would be, because this is 1 minute time frame, just target the OB high and leave the rest for runners basically. But as a general rule of thumb, like if I go to, hold on, let me go on to daily, okay? This price action. This was last year summer, okay? July to September, October, November. This was the first pullback of last year. Look how it initiated though. Here, you can see that. Goes for the high of the OB, rejects, basically fails, red candle is formed. Now you have the OB right there. Goes for the OB, range EQ, mean threshold, or premium, whatever, sells off. Now, after the sell off, it pulls back. Where does it pull back? Now you have a new dealing range, right? From buy side to sell side. It goes for the premium and forms another red candle. This is confirmation. Once you have that, now you can go for sell side, you can go for short, right? And it does, along the way, it does it a couple times. So for example, here, okay, which these things are indicating basically bearishness, okay? And along the way here, I'm looking, so at the range EQ again with the new dealing range. So you have new high, new low, premium. See, there you're not gonna see a daily SMT divergence here because it has just one high. And if you don't miss it, if you don't want to miss it, and if you wait for a confirmation with SMT divergence, you're not gonna get it. So you can use the red candle for a confirmation to go short. All right. Like someone might ask, let me delete this. So here it did the same thing, but why did it reverse? But look at the low. It already took the OB low. Okay, that's the first target anyways. And then the down close candle got swept, that got manipulated as well. Once it does that, look at the body. It's telling you the story. Now the odds are against you. Once it flips that down close candle is 50%, GG. It's basically going for the buy side. Look, once it flipped it, boom, like one candle, it just expanded 400 points after that mean threshold failed. You know what I'm saying? So I hope that makes sense. So we had here, same deal, a first retracement, right? And that first retracement starts with red candle above an OB. Now you can use that OB. So just do your do your own due diligence, basically. Like, go back in time, look for different time frames, look for the red candles, maybe back test it. Don't use, guys, okay, I'm gonna be honest with you, okay? Do not use this right away tomorrow in live market. Just observe it, but don't execute anything speculating around this stuff, because you just learned it, and this is not like me giving you gold in hand or whatever. Like, it's not the magic stick basically. Now we have the same deal here. So it formed the OB, right? Rated above it, failed, and then it retested the OB mean threshold and failed there. Thus we sold off. You know, you can also get daily bias or higher time frame bias with this stuff, which is why it's good. You don't have to use it for executions necessarily. Any other question, guys? Damn, I miss having classes. This was fun. Cool, man. I wish I could have found that setup that I told you in general chat on Friday. So this is Friday. What did I see here? I forgot. Oh yeah, I covered that actually. So I saw this and then this 2 times. Okay, I think that was that. Sounds good. If you guys have any questions later on after backtesting or just watching the price doing this, forming these things, hit me up whenever you want. I'm always available for you guys. So yeah, I mean, it was an aha moment for me as well, because I don't like using order blocks that much. It's because I think I hurt myself before with OB, so I usually utilize fair value gaps. But And I was like, you know what? Let's look into this because this is basically a manipulation. And whenever, so this is another thing I've noticed. I need to backtest this, but like for example, let's find an example. Maybe we can find it on the 1 minute. But whenever market reverses without this manipulation, it always refers back to that level. If that makes sense. I need to find an example to showcase what I mean by that. But like here, is it a good example though? I don't know. So there's no manipulation there, right above the OB. What it does is it goes for the high, which basically the one set out for life. You know, if it manipulated above it though, then we wouldn't have the one set out for life, you know, rally here. So let me find another example though. Sometimes it's really hard to find examples. So here, look, there's no formation, and look what it does. It comes down and then goes for that high. Why? Because it lacks manipulation, so it didn't manipulate above it. So along the way, like also you look at the order flow. No manipulation above the OB, then another up close candle, no manipulation above that, no manipulation above that. So this could be, I'm not saying it should reverse, but it could be an indication of the sell side being manipulation basically. So look at all the OBs, potential OBs. It never basically IFVD'd above it, never along the way. And on the other hand, if you look at this leg here, it swept the down close candles, then it swept it one more time here. I mean, this is not an OB, but you know, here it swept it one more time. You know, it's keeping its order flow, basically securing those manipulations to deliver buy side. And then look at what happened at the highs. It swept the high, rejected and sold off, and went for the sell side. You know, and here it does the same thing. Sweep below the down close candle and rally. And that down close candle here, that becomes the OB, not the previous one. So once it sweeps that low, this one, okay, and breaks out, now you can use this one instead as an OB. Here's the OB, and also annotate the mean threshold of it. But before that, there's nothing. So I did the same thing even on crypto. I'll show you. In crypto, okay, daily chart, daily time frame. Here. So we had the retracement all the way down into the discount, right? Now that we have that down, let's look at this consolidation here. What does it do? Down close candle got swept here. This down close candle becomes the OB. So you have the range EQ or the mean threshold. Look how it's respecting. That's a long. And then you have the OB itself. Never retested it, but that's fine. So it retested the mean threshold 1 and 2 times, and the third candle just displaced. Where does it go? It went for the first high and probably going to complete the buy model. But anyways, just to showcase how it is. Anyways, guys, I really don't want to waste more time of yours. So I think I'm going to dismiss y'all if you don't have any questions. If you have any questions later on, feel free to ask. I'll be here. And I'll be uploading the recording and the PDFs in 5 minute tops. Thanks, guys. Have a great day. Let's kill it this week. See ya. forgot to